Hello. If you're using QuickBooks Online, you might assume that just because you've entered everything, that your books are fine. And of course, this is not necessarily the case. And it is really important to do a quick review, especially at the year end, to make sure that your books are in fact accurate and that you can trust the numbers that you see in your books. So in this video, what I am going to do is to show you the two essential financial reports that you need to look at, i.e. the profit and loss statement and the balance sheet, and help you identify any potential issues and to make sure that the numbers make sense. My name is Ronica Canna. I am a CPA, a CFA, and the founder of Montreal Financial, where you can find lots of resources for your small business. And I encourage you to sign up for my newsletter. Okay, so let's get started. The first thing we're going to do right now, what we're looking at is the new version of QuickBooks Online. They keep changing this. I'm not really sure why, but since this is a new version, you really need to get used to it. What we're looking at today are simply reports. And so what I'm going to do is go to the reports on the left-hand side. And if you have not created custom reports, you can simply click on standard reports. And once you do that, the first report you're going to click on is the profit and loss statement. Now I can open this in a new tab just so I have these reports all available to me at the same time. And you'll see here that I have the profit and loss statement. And I am going to choose this calendar year by scrolling up, click on Run Report. I also want to look at the previous year as a comparison can help highlight any potential issues. And to do so, I click on Compare Another Period over here and Previous Year. Keep in mind, if you are using the Easy Start version of QuickBooks Online, this might not be available to you. And in that case, this is fine. You can simply just use the profit and loss for the current year. So I'm going to run report. And now you'll see that I have last year's versus this year's. So the profit and loss statement tells me the total sales for the year, and it also tells me what my expenses and my cost of goods sold are, and then it gives me a profit number at the end. So as you can see here, I can see my total sales. You can see that they're up from last year. That's great. My purchases, which generally relate to product sales, are also up from last year. And now I have a gross profit number, which is also up, which is exactly what I would expect. Now, if it was lower, I would want to kind of look into why this was lower or if there are any issues potentially here. The other thing that you can do is if you are not sure of what the amounts are, you can click on any one of these to see the details that make up each account. And that can help you identify if everything is correct and if it makes sense. Now, you'll see I have an advertising charge this year. I did not have anything last year. This is a significant increase. Everything else is pretty much in line. My home office expenses are a little higher this year, and legal fees are lower. I did pay a salary. This is a Sherlock Holmes detective agency. So Watson received a salary of $22,000. Last year, he only received $2,000. And I had some travel compared to last year. And again, if you're only looking at this year's, this allows you to see what your expenses and your income are for the year, and if they're in line with your idea of what they should be. You want to make sure that they're not understated or overstated. And you also want to make sure that you haven't forgotten anything. And for example, maybe you didn't capture all of your internet expenses or your home office expenses, or perhaps you had a subcontractor bill you in December, but you only pay them in January, but you did not reflect this yet. And then once you do that, you can see what your profit for the year is. Our profit is lower compared to last year. And one of the primary reasons for this, even though our sales went up, is because our salaries also went up significantly. So this resulted in a lower profit. That's one of the number one contributors to the reduced profit. Now, once you determine your profit, you can estimate the amount of income tax expense that you owe. Note that income tax expense would really only appear here if your business is a corporation. If your business is a sole proprietorship, generally speaking, you wouldn't put your income tax expense here because it is a personal expense, essentially. But this is a best practice. If you decide that you want to just put an estimate here for your sole proprietorship, that's probably fine. Okay, so that is your profit and loss statement. This is going to be very specific to each of you. But by looking at this, you will have an understanding of how your business is doing, how profitable it was, what your expectations are. And this could be the basis for a budget in the future. And I do have a video on how to set up an operating budget. You can take a look at that as well. Okay, so now what we're going to do, now if you want to save this, you can simply click on Save Customization and it will show up in your custom reports. And that way you don't have to go and change the date or anything else each time that you use this. Okay, so let's go back to standard reports. The balance sheet can be accessed by also going under favorites or over here. And if you click on balance sheet, I'm also going to open this in a new tab. So that way I have my profit and loss over here. And the review of the balance sheet is a little more extensive than it is for the profit and loss statement. Now, if you are a sole proprietorship, the balance sheet is less important because generally speaking, you are just reflecting your profit and loss amounts on the T2125 of your personal tax return. But you should still review it, whether you're a sole proprietorship. And if you are a corporation, it is very essential to look at your balance sheet because this is where you might find errors or omissions, things that you need to look at. So we're going to go over this in a little more detail, and I'll tell you what you need to look for. Okay, so again, we're going to choose this calendar year, January 1st to December 31st. And I also want to look at the previous year, so I will run report. Okay, and also just make sure that your accounting is accrual accounting for both your profit and loss and your balance sheet. This is required by Revenue Canada. The only exception is if you're a commission-based salesperson or potentially in farming. Okay, so by looking at this, you can see your bank balance. Now, it is very, very important that this bank balance is reconciled to your bank statement. And the way to do that is you would go to your accounting and you would click on reconcile. And I'm not going to go through this now. That is the subject of another video. And there are many videos on how to reconcile your accounts available on YouTube, and you can see how that's done. But again, this balance should be equal to what's on your bank statement, or if it's not equal, the differences should simply be transactions that have happened but have not gone through the bank yet. So for example, you might have some checks that you sent out, but they've not hit the bank account, or you have some deposits that you received but haven't yet deposited until the new year. And so those are the only real differences that should appear here differences between the bank account and the bank statement. Now, your accounts receivable amount is very important to verify. And to verify this, you would go to your reports, which are up here, and pull up your accounts receivable aging summary just to see what the breakdown is. And now, the first thing that you want to do is to make sure that the total here equals to the total here. If it does not, then it is possible that something has been entered directly to this account without being entered as an invoice first. And so that is something that you would want to investigate. The other thing you'd want to look at is your older invoices to make sure that these are still collectible. Send out reminders, which you can do through the sales module by going here and just going to invoices and sending out reminders or statements. That's all possible through QuickBooks Online. And there might be some accounts that you want to write off. And in that case, you should identify what those are, and you could potentially write them off as bad debts. I also have a video on bad debts and what to do, so you can take a look at that to see what's involved. Okay, so as we go down, we have some inventory assets, and there is also a report in QuickBooks Online that will show you what your inventory is if you're entering inventory directly through the module. That is available in your standard reports, and you can just type in inventory valuation summary. Now, the total here won't equal the total over here because I do have some journal entries over here. And if that's the case, you want to identify what the differences are and ideally make sure that those journal entries are actually entered directly as inventory items. So now you have some other items here. There, you might have some fixed assets. If you have fixed assets, you want to make sure that you reflect the depreciation for the year. This is something you can do directly or your accountant will do as a year-end adjustment. And you might have some investments. Now, investments, generally speaking, in Canada are reflected at the book value. So if you haven't added anything to this during the year, you would simply reflect the investment income that you received. This is slightly more advanced, but you do want to make sure that the total book value agrees to the total book value on the investment statement from your investment broker. Now, the accounts payable, similar to the accounts receivable, you can actually look at the underlying report to see what's payable. And so if we go back to standard reports here, and if we scroll down, you can see that you have your accounts payable aging summary. So if you click on that, you'll see this total agrees to this total, which is great. And then you want to evaluate, look at your accounts payable. Why haven't they been paid? When you're going to pay them, or if anything needs to be written off. Okay, so the next thing you want to look at is the credit card. Similar to the bank statement, the credit card should be reconciled. And again, to reconcile it, you would go here to reconcile, choose the credit card from the drop down, and make sure it agrees to the balance. And in this case, there might be a couple of outstanding transactions, but generally speaking, it should agree to the statement balance of your credit card. And if you have more than one credit card, you should do the same. Now we can scroll down your GST HST payable, and you'll see here we have two, a QST payable and a GST HST payable. If you're in Quebec, often this is just one number. In this case, this is for those of you who are located outside of Quebec, but also have GST and QST payable. Now here you want to make sure this agrees to the sales tax amounts in the sales tax module of QuickBooks Online. And to get to that, you would go to all apps, and then you would go to sales tax and open this in a new tab. And here you can see that my sales tax owing to Revenue Canada, my GST HST payable is equal to 68.45, which is identical. So that's great. And that's really, really important that they match. If they don't, you do want to do some additional research to find out why they do not match. Similarly, the QST, the Revenue Quebec refund amount is 74.56, which equals to this amount. And again, you would want to investigate if they're different. We also have a shareholder loan. Because this is a payable, a liability, this is how much the corporation owes you. Shareholder loans are only for corporations. And so you can take this money out of the corporation tax-free if you want at any time. Okay, so now once we look at retained earnings, you'll see that this over here, which is balanced at December 31st, 2024, doesn't really match the opening retained earnings, nor does this 810, which is a profit for the year, match the amount over here. And the issue is that the year end for the Sherlock Holmes Detective Agency is actually November 30th. And the way QuickBooks works is that it rolls over the profit at the end of the fiscal year. So let's change the fiscal year on both of these reports. So we're going to choose last fiscal year run report. And then here we are going to use the last fiscal year run report. And here you will see the profit is 2789.20. And if we go back to the balance sheet, you'll see the profit now agrees because it is as of November 30th, which is the proper fiscal year. The other thing you will notice by changing this, the total retained earnings at the end of the period agrees to the starting retained earnings. So in this case, we actually have the correct retained earnings balance for a total of 11,641.82. Okay, so that's it. That's all for the quick year-end review for your balance sheet and profit and loss. I hope this was helpful. If you have any questions, don't hesitate to leave a comment and I will try my best to answer it. And please like and subscribe. Have a great day.